Per usual on this channel is for educational purposes only and is not intended as financial advice. We've had quite the week. Feels like still not many people are here. Retail certainly isn't here. Institutions certainly aren't here. We're getting a little bit of a bid from Tether issuance, which I'll discuss here in a second. This is just Google Trends, just to show there's really nobody here. You know, we're not seeing a lot of search interest for Bitcoin, for ETH, for Solana, for Link. You might say from cycle to cycle, we will see less and less. There will be a diminishing return of search interest. That's fair. But we're up, 130% on the year on Bitcoin. Solana's up like 300% on the year. It's just nothing, even if we take off Bitcoin here. Not a lot of activity, not a lot of social activity. Still feels like it's about 50 people who trade this stuff. So as crazy as a run as we've had, arguably so far, this still feels to me like we are in the early stages of eventual post-halving continuation. I think we're going to slow down into halving a little bit. We'll have some fun relative to ETF announcements, but the real show is going to be inflows after halving, which is still another 6 months away. So marathon, not a sprint. Keep that in mind. Solana did have a nice bump here, a nice bumperoonie in search interest. And if we look at alts, this is the alt market cap taking out Tether, USDC, and wrapped Bitcoin. Really, we had that immediate move, just straight up. We've had what, 3 billion in Tether issued, and just a crazy altcoin move. Everybody back in the pool, mainly Solana, some other stuff catching up. ETH still lagging. I'll talk about that. But before I talk about any of that, I want to talk about something I never really talk about, which is open interest in funding. I know you can hear the groans in the crowd. First thing with open interest, last week, CME overtook Binance for the first time. And what's funny about this is these are the reported values. I'm guessing a good chunk of this probably isn't quote unquote real or is embellished in some fashion. If you look at the rest of the offshore stuff, it's even slightly lower. OKEx a little bit better above board over the past few years. Deribit's fully KYC'd. BitMEX completely neutered. At least Binance, they've put a muzzle on with lawsuits. Bitfinex way down here, Kraken way down here, right? So I would argue that this lead for CME relative to open interest on the future side is actually way bigger than what this even looks like. But the data is the data. And it's good to see CME ahead, even with the probably unfair advantage that Binance has based on the validity or invalidity of the data anyway. So we've seen quite a big bump in futures OI, and this is tough because from cycle to cycle, from exchange to exchange, this is going to change a little bit, but in general, the market will reach some sort of interim level where the sheep need to be sheared, okay? Now, you don't want to cull the sheep. We want to shear the sheep. If we cull the sheep, they won't come back. They won't keep shorting, or they won't keep longing the top, right? So you'll notice on the way up in 2021, every so often, right, we'd pull back. We'd get rid of the late longers. We would let the shorters think they knew something and then rip it again, right? So it's hard to know at the current spot what the appropriate open interest would be, but we are at a multi-month open interest high on Bitcoin. I don't think that's too big of a deal, but definitely something to continue to watch. Now, if we look at some of the other coins, if we look at ETH, also at the multi-month high, not quite making a new high. So this to me looks like it has a bit more room. If we look at something like Solana, almost at an all-time high for open interest. It could be longs, could be shorts, right? Funding tells me it's probably mostly longs here. So there are some sheep ready to be sheared, right? There are some longs that inevitably bought the top and will pay for it, okay? That's part of what happens in the market. Just got to be ready for that sort of thing. And then Link as well. This is CoinGlass, by the way. Link as well. I think this is an all-time high. Close to it as far as open interest. So could we go higher on open interest? Of course we could. But there reaches a point where it gets super juicy for somebody to take the other side of that trade. And if we look at funding on top of open interest, red means longs pay shorts, green means shorts pay longs, which would be negative funding. So as we put these pieces together, the funding here means you are less likely, you are less incentivized to keep a position open if you are eating extremely high funding and prices are flat. If prices start to decline, you are even more likely to close a position. This is all probabilities, right? This is all just guesswork. This is not exact at all. You can look at funding rates for the exchanges at certain levels, like they have a graph down here. And again, we can say over the past X months or from cycle to cycle, what has the tolerable funding history been? We're certainly at a multi-month high on the Bitcoin side of things. We can look at ETH, mildly elevated, certainly at significant highs relative to where we've been since May, which makes sense. Price hasn't been up here since, February, right? It's been a long time since prices have been up here. If we look at Sol funding, also same picture. And Link, really, these are the only four I care about at the moment. These are the four that have moved the market. So either funding is going to need to come down, reset a little bit, which is more likely than just blowing out, massive continuation. Funding keeps going higher. This is kind of a wonkier market probability thing, but just think about it for your own positions. Some people don't care. Some people eat $1 million in funding on the way down on a short, as long as they're right, that's fine. And that can happen. But when we're at these will she, won't she, points in the market, funding becomes more important to me. This tells me I probably don't want to go max margin long up here. I probably want to wait. That's just me. All right, looking at the Bitcoin TA, just to go through these quickly. I talk about most of these every week. This is the power law corridor. Really, it's just an oscillator. Are we towards the top? Are we towards the bottom? That's the stupid simple version. The left curve is telling you we got plenty of upside. Nothing to be worried about. Is this going to help you in a 20x margin position in the moment? Probably not. But from a cycle perspective, relative to halving, we got plenty of room. 2-year moving average multiplier, same deal. Certainly closer to the bottom than the top. Not even at the midpoint yet. Plenty of room. This is what we want to see historically. We want to see prices above the 2-year moving average before halving. And then after halving, we want to see a nice uptrend into that midpoint. And then towards 6 months to a year after halving is typically when we see prices reaching a terminus there at the resistance, the 5x 2-year moving average multiple at the top. So this is dynamic. It'll change over time. Plenty of room to keep going. If we look at MVRV, which you can pull up on TradingView, it's more of a on-chain metric. It looks at market cap relative to realized value. And you can think of that, at least I think of it, as unrealized versus realized value. If the market cap is significantly higher by several multiples relative to the last time coins have moved on-chain, on average, then that tells me there's a lot of unrealized profit. And the later we go into the cycle, you'll see this multiple. This is a Z-score, but you'll see this multiple go 4, 5, 6, right? We're currently at just above 1. We were just under 0 when FTX blew up. Again, relative to halving, exactly what we see. Relative to the bottoms, exactly what we've seen. Not a lot of data points. Okay, this is like an N of 2, so keep that in mind. But so far, so good. And it says, again, plenty of room for upside. This one I talked about last week. This is the distance from the 20-week moving average. Again, we're just getting a feel. We're trying to feel, is the market overheated? Can we look at that with math? The funding OI stuff is, to me, more like sentiment. Okay. Now we're leaning towards math. We're looking at the previous cycles. Where are we relative to the 20-week moving average? You can see we're pushing up the Bollinger Bands, which is very bullish. And relative to the tolerable levels where you'd expect price to pull back, we have a little bit of room, right? We're currently 26% above the 20-week moving average. Realistically, the tolerable level closer to 38%, right? So either we slow down a little bit and let the 20-week catch up, we go to 38 and pull back, or both just keeps moving up slowly, right? Again, no guarantee, but the trend is your friend till the end. And right now it's definitely very, very bullish. Now, one thing that does give me hesitation on the daily cloud would be the TK disequilibrium here. So we are seeing early stages of a TK C-clamp, which we've seen various versions of this basically once a quarter. Now you could argue this time is different, okay, which I think it is, but we still have this nonetheless, right? I can't say to myself, realistically, yeah, this looks good for a 10x long, 5x long, until I see some pullback in the market. I might not get it, right? I might not get a better margin entry. I'm okay with that. I have plenty of spot. That's fine. But for me, if I'm trading this on leverage, I need to catch this on the retrace or be very certain on a chart pattern or consolidation or something, right? So this massive TKC clamp starting to form just tells me, hey, it's probably not a good idea right now. Now we're probably getting a higher high across the board. We're probably going to get a divergence leg of some kind, but even still, I'm not super confident in that. And if we turn on the fractals on the 12-hour, starting to get a divergence here on RSI already on Bitcoin, the current fractal stop loss somewhere around 36. And then you could argue, this whole diagonal potentially is where we could find support. But ultimately, this just needs more time for me to be super confident in a margin position all the way up here. Here's an indicator for the TK disequilibrium. And again, you can see we can tolerate a little bit more. Historically, similar to that distance to the 20-week moving average, we can tolerate more. This can go higher. So again, I do think we get a divergence leg. I do think this gets blown out a little bit more. I'm not highly confident in that, but it is possible because it certainly does feel like we've moved up fairly quickly across the board here. Relative to the weekly cloud, 42 is still the level, which could happen this week, could happen next week, could happen while you're eating Thanksgiving, while you're taking, if you're a stuffing cranberry turkey dark meat person, like me, all on one fork, that's when we might hit 42. I don't know, right? It still looks good. The point is on the weekly here, pre-halving, for the past two halvings, we have peaked above the cloud and said, nope, gone back down. So it wouldn't be unreasonable to, at some point, eventually go for 42, maybe slightly above that, and then retrace to whatever the key June is at that time. So 42 still looks definitely on the table by year end at this pace. And here's something that I don't think anybody's seen. This is the monthly singled crypto settings cloud. So it's the 10, 30, 60, 30. You have to do this because you can't do doubled monthly. But the point here being we actually are above the monthly cloud at this point. We almost have a monthly Kumo twist followed by a monthly bullish TK cross with price above cloud. So if this is correct, it would certainly suggest a massive run based on an N of 2. Again, okay, not a lot of data here, but this is exactly what you'd want to see for a bullish move higher, before a bullish move higher. And in December, we probably will see a bullish Kumo twist at that point. So even the monthly is shaping up extremely well. Looking at the pitchfork, basically the year-to-date diagonal trend lines also says, yeah, we probably have a little bit left in our tank before we get a little bit overheated, right? Now, if we get some ETF announcement, we could go to 47, wick down to 42 on the day, wick back down to 39 on the week. I don't know, right? I expect absolute mayhem, but there's still plenty of room to keep going here. We are banging on the yearly pivot. Do I think we'll hit 60 by the end of the year? No. 47? Maybe. 42? I'm fairly confident that's a 100% chance that we will hit that by the end of the year. We got, a month and a half, so I think we got plenty of time. Even if we retrace the 32, which is the cloud support, 32 to 42, still on the table, very much. And 47 would be the logical horizontal resistance max point. Also based on VPVR 47 is an important level. Between 40 and 47, not a lot of volume resistance. So after 38 to 40, things definitely get very, very interesting. Another reason I think we slowed down, though, if you just look at the previous consolidation pattern or range, we have reached the logical 36 to 39 target here. So crypto's going to crypto and it's going to do its thing. OI is going to go to infinity and funding is going to go to infinity and things are going to get weird. But this is just telling me, be careful. Be careful up here. GBTC continues to close the discount. I believe this is around 10% now. There is a yearly pivot at 45. This is, for me, as a trade, completely news dependent. So we'll see what this hits relative to what I assume is positive news. If it's not positive news, things could get real messy to the downside. But I don't think this could go to 45 on positive news, but it really depends on the discount to me. But on that day, I definitely plan on dumping my GBTC. If you look at the weekly cloud 31, is the 42K equivalent for spot. So we'll see. But so far, this looks great, has looked great. It's outperformed Bitcoin, which makes sense. That discount is closed. So it's gotten juice from the discount closing on top of Bitcoin's positive performance. Looking at ETH, not too much going on other than breaking horizontal resistance, which arguably super important. The volume resistance gets a lot smaller up here relative to sub 2000. Still not much volume though. And I hope this isn't the case, but over time, as things like CME and trusts and whatever global products take over on the institutional side, the spot signals may diminish in that we may not see crazy volumes, right? This arguably was retail driven. If those institutional products are using OTC measures and those OTC measures are using 10 different exchanges, it might be harder to see those signals going forward. So that's also something I'm keeping in mind, but I still want to see volume to be sure that this has broken out on ETH. In any case, I like 3K easy. I don't think there's anyone at this point who doesn't think ETH is lagging and deserves a higher price based on relative value. We could argue about use case and network, but I certainly think we got plenty of higher highs left on ETH. ETH on the weekly cloud above that yearly pivot again, and the weekly cloud level is 28. So 28, 31, that's all gravy as far as where this could go. And from that perspective, ETH, which I'll get to in a second, might be the trade of the week. Might be, which is wild, I know, but because of that discount, it does really help potential upside if those discounts close. This chart's a mess, I know, but if we look at the Bollinger Bands again relative to that 20-week moving average and ETH historically relative to that 20-week moving average, plenty of room for upside still. ETH hasn't even broken out of the weekly bands, arguably. So this still a very slow going breakout, if you can even call it that so far, but it does look like it wants to break higher here at some point. Now, ETH has been stronger than ETH on the spot side, certainly. Discount still somewhere around 12% and has really made higher highs much earlier than spot ETH has, right? When it broke 12, that was kind of the go signal from the inverted head and shoulders perspective. On the ETH cloud on the weekly, I like somewhere between 24, 27 based on yearly pivots in the cloud. So that's another 50% move, potentially really highly dependent on the discount. I don't think we see a premium on any of these products again, but we're seeing 1,000% premiums on Filecoin Trust and 600% premiums on Solana Trust. So, I don't think it's completely off the table. I just don't think that's what we're going to see. Looking at ETH-BTC, it's chilling at a yearly pivot, the 200-week moving average below the cloud. This isn't a buy for me. I'm not allocated into ETH over Bitcoin here. It's got an M double top. It had a decent week relative to some surprise news on the BlackRock ETF spot application. But I think this pair will get punished when the BTC spot ETF gets approved. So we'll see if this then that. But for me, the time to buy ETH or rotate into it potentially would be somewhere way down here at 036. I know a lot of people have been celebrating the ETH-BTC move. A little too early for that, I think. Solana, quite the run. Daily cloud, first things first. Support all the way down here at 43, let's call it. Looking at the daily Kijun there, we're continuing to see, this is Kraken, by the way, higher highs in volume. And I think Kraken has the best SOL volume, which is bizarre to me, but that's where we're at. So no volume div yet. No RSI div yet. And that does lead me to believe we could keep seeing higher highs. At some point, RSI does mean you have to pay the piper, and it just doesn't make sense to go higher anymore. Close to 90, which is quite high for those playing the home game. We've also got a tweezer top potentially here with these two candles. We had a similar tweezer that we eventually reconsolidated and went higher, but it's a little too soon to just say, yeah, we're going to keep going here, right? Look at funding, look at OI, look at all the other stuff. I'm certainly not expecting Solana to continue to push. That doesn't mean it can't. I just think it's going to be tougher. There's going to be more of a headwind because it's already up a considerable amount. I do like an eventual 140 target. I don't think that's going to be by end of year. I think that's going to be probably closer to Bitcoin's halving, if I had to guess. But ideally, we get another massive trade out of all this stuff, right? People would hate this, but a move to 47 on Bitcoin and then some sort of recession, something to 25, similar to 25K. So for Sol, that would be a move to $25 USD and then a move to 140. I don't know if we'll see that, but I'm just looking at cloud levels here as potentials for where we could go, but it's a very good omen for Sol to already be inside of the weekly cloud like that. And then on the 8 hour, I was mapping out this 3 drives, which is a known chart pattern you'd see or market behavior, let's call it. There is a bear div on this. This is just some random time frame. It doesn't really matter. I'm just looking for those 3 drives specifically. And similar to that, daily key June level 44 to 48 would be satisfactory for a retracement. If we know anything about alts, once this thing starts to topple, you may see a mega wick to like 30 or something stupid, right? So be careful for that because people love to get silly with margin. Sol relative to ETH has kind of surpassed any logical mega resistance point. I don't think this goes to all-time highs now. I think this finds some resistance somewhere and turns down, and ETH has a turn, right? I don't personally understand the fundamentals for Solana here, why this is outperforming. It just feels like it's the coin. I'll get to AVAX at the very end. Guess what? That's up 55% this week. Why? Because it was down. Like there's no real reason why it needs to be up this much right now. You could argue devs and community and users and NFTs and DeFi and TVL. I still don't buy it personally, but whatever. Sol BTC also getting close to a logical place where resistance would make sense for this current move. If you measure this as an Adam and Eve from the bottom, we're again at a logical resistance reconsolidate point. So I did sell some Sol yesterday. Don't hate me, Sol bros, or whatever you call yourselves. Link BTC might be more important, honestly, than the Link USD chart. There's a massive double bottom here. Maybe you could even call it an Adam and Eve. Doesn't really matter, but these BTC pairs may start to lead price a little bit as far as being the better signal, just because the USD pairs are so stretched out. It's like, what do you even look at this point? So I do like this higher. The question is just when, obviously, so it is at a logical resistance. It's at a neckline, whatever you want to call it. I do think this does eventually move higher. Link USD daily cloud, blown out like Solana. Support all the way down here at, we'll call it 11. You can see these TKC clamps starting when price gets so overbought or oversold that it's above or below this blue line, the Tenkin, that much, right? And it just says we probably need to slow down a little bit. No bear div though yet, right? So maybe too early for me to be calling a quote unquote top, but I personally don't get excited about buying something like this. So I did sell some Link yesterday as well. From a longer term weekly perspective, in the weekly cloud, not a lot of volume resistance on the way up based on VPVR. Yearly pivot 21, potential target. Probably not by year end, but Bitcoin's having. And again, we could see Link go from 7 to 21 if the entire market pulls back and spills down. This would be post Bitcoin halving at some point, right? The Fed starts cutting. The world's falling apart. The Fed flips from QT to QE. We get some sort of stimulus of some kind, right? But before all that happens, things start to get ugly, or we just go straight to 50, whatever. But there's a lot of room to play around in these weekly clouds because they're so thick at this point. And then, of course, there's AVAX, which there were a lot of charts that had this W double bottom setup. And I had said in a couple streams last week, look, if you think your coin is the coin and it has this chart pattern, why would you even set a target, right? You set a stop loss at lower lows and you just let it do its thing. And sure, Yahtzee, right? You got a 55% move. It is above the 2-day cloud. For me to want to get into something like this at this point, I would want to see cloud flip bullish, TK lines catch up a little bit, right? This to me is a bit overbought at this point. So then quickly, let me just talk about legacy for 2 seconds here. The big thing this week is CPI. We've got like 25 Fed speakers who don't have anything better to do, apparently. So there's going to be a lot of Fed speak and a lot of hemming and hawing about CPI and core CPI and all that fun stuff. So keep that in mind. As far as the actual CPI number, Trueflation has us slightly under 3 here. The October Trueflation was also under 3. So not a lot of resurgence just yet in Trueflation. A little bit, right? There's been a little bit, but I think CPI is still catching up to Trueflation coming all the way down to almost 2. So if we look at the nowcasting by the Fed, they've got an October CPI at 3.28, which is down from 3.7. And then they've actually got a November CPI even lower than that. So the market doesn't know it, but the market wants higher for longer, because the moment the Fed pivots, that would indicate something's blowing up somewhere. Okay, so if we're strong, if CPI is under control, core CPI is under control, then we can start talking about crazy stuff like this, which is all-time highs in the Qs. Walmart's at an all-time high, not in not in the Qs, I don't think, but Microsoft at an all-time high. Nvidia looks like it wants to cancel the head and shoulders and keep going. So I'll talk about legacy more tomorrow, but this is very much on the table. Very, very much on the table. And I think the macro doomer bears would continue to be in disbelief, continue to say, none of this makes sense. That's fine. But, the chart's the chart. I'm a breakout trader. I like breakouts. I like that people hate it, right? So I do think we see some sort of breakout here. I don't think we get to 450 by the end of the year, but I think we get a pretty decent attempt, as everybody, including myself, thinks an eventual recession is coming. But market's going to market, baby. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.